Hi everyone, and welcome to this session with Gain. This is a day in the life of a portfolio manager, and it's a panel discussion. I will let you know how. I'll give you a brief intro to Gain before I hand you over. But in the meantime, I'm going to put up 3 quick poll questions, which would be really grateful if you could answer. It should pop up on your screen, and all you have to do is just click yes or no, or choose whichever one you'd like to do, whichever option you'd like to select. So I've put those up now. And so welcome to today's session. I want to say a bit about GAIN. GAIN stands for Girls Are Investors, and we were set up to try and redress the sort of staggering lack of gender diversity in the investment management industry. At the time GAIN was set up, I believe 10% of applications for investment analyst roles came from women, and GAIN's goal is to get that up to 50% in the next 10 years. And we do that through giving talks at schools, and then for universities we do a lot more sort of workshops, panel discussions. We ran our internship program this year for the first time, so we do a lot more on the university front, which is where all of you guys come into this, and we do that through the help. GAIN's biggest strength is our massive, incredible network of volunteers who just have so much experience and just want to share it with you all. And we're just incredibly lucky to have the sort of women and men in our network that we do. And on that note, we've got 4 of them with us today. And I will hand over to Joanna, who is going to be your moderator for this event, and will kick us all off. Have a great time.
Thanks, Vicky. Hi, everyone. Welcome to the webinar. My name's Joanna Woods. I am a portfolio manager at Franklin Templeton Investments here in London. And as Vicky mentioned, I'm going to moderate this evening's conversation. I'm joined by a panel of highly esteemed women from the industry who I'll briefly introduce for you all. Firstly, we have Francesca Ritchie, who is an executive director in the Goldman Sachs multi-asset investment team. Francesca started at Goldman in 2015, having graduated from Cambridge University, where she studied land economy. Next, we have Jennifer Linacre, who is a fund manager at DTZ Investors. Jennifer manages UK pension fund property portfolios, and as part of her role, she's also involved in the Responsible Property Investment Programme at DTZ, and also sits on their ESG and Wellbeing Committee. And finally, we have Sophia Hart, who is a strategist at Lansdowne Partners. Sophia works in a team at Lansdowne that specializes in energy and energy transition, so certainly a very topical area at the moment. And prior to this role, Sophia worked in equity sales at SocGen, UBS, and Goldman Sachs. So we'd like the webinar to be as interactive and hopefully as fun as possible. So please do not be shy. If you have a question, you can submit the question via the Q&A box. I'll kick us off with a couple of questions, and I'll be kind of checking periodically for participant questions, which I can throw to our panelists along the way. So starting off, perhaps a question for you, Francesca. Can you tell us a little bit more about working in a multi-asset investment team? So what does that mean, and what does a typical day look like for you?
Yeah, of course. Thanks, Joanna. And good evening, everyone. Thank you very much for joining, and echo all of that. I hope we can be as useful for you as possible. So what is a multi-asset investment team? And I think a good first question, because of how it interlinks with the different roles that others on the call do. So multi-asset really means cross-asset. It means everything we do is not just equities or bonds or property, but the time that people would come to a multi-asset investment team is when you're looking for a solution that is across more than one asset class. So probably a key difference, just to highlight it really up front, versus what others may do in their day job, is that my job is not about picking an individual stock or an individual bond, but it's much more about how do we combine asset classes and recognize that different asset classes have different characteristics, and how do we bring them together for an individual client portfolio. So a bit of a difference versus if you are an asset class specialist portfolio manager, that I'd probably say up front. But yeah, as you mentioned, I got into the role, started in 2015, so it's been at 5 or 6 years now. And perhaps if it's helpful for a little bit of background, I started off originally pre-investing, thinking I was going to work in Formula One, and then started doing engineering at university and realized actually me and engineering and Formula One probably wasn't going to come together as well as I'd thought, and realized that actually that things I was more passionate about was a bit broader and more of a different combination of different skills, and I ended up doing something which sounds a bit obscure but called land economy. But what it actually was a bit of law, a bit of development economics, and a bit of sustainability. It was quite broad, and you could choose what you wanted to do in it. And then that ended up suiting me better. But interesting, because of being in a portfolio manager role now, often a lot of people do have a sort of STEM or more mathematical or science backgrounds, but by no means the vast majority or the entire group. And I've actually found it interesting that in a lot of ways, the course that I changed to, because it was sustainability, which has now become an increasing focus, I think, for probably all portfolio managers, are feeding that more into their jobs than they might have been 5-10 years ago, and development economics too, which is all about inclusive growth. It's actually become more relevant than I might have thought when I made that switch. So I did that, and I did the Goldman Sachs internship before joining. I did their spring and summer analyst program, and that's really the way for me that I guess I got my foot in the door. But yeah.
Thanks very much. Jen, perhaps you could do the same, touch on what your role involves and how you ended up there.
Absolutely. Hi everyone, I'm Jen Linacre, and thank you everyone for joining us today. I think I think it's really interesting talking to everybody and explaining a little about what we do, because I had no idea that this industry even existed when I was at school or university, and I think it's really important that that we can try to engage you guys now and enliven that passion and that energy that I know you all have now. And I sort of discovered a little bit later on when I fell into this area. I guess, what do I do? As Joanna said, I work in real estate investment management, predominantly managing direct property portfolios on behalf of institutional clients. So it's mainly pension fund clients. Although as a business, we also have created our own property funds. We invest in other people's property funds, and we also buy and sell assets directly for private investors. So I guess, what is property pension fund management? Well, we set strategies, we create portfolios, we buy properties, we manage them, so we develop them, we let them, we refurbish them, we talk with the occupiers, we understand what it is that they want, we understand what it is that investors would like to see in buildings, we try to create those products, and we eventually sell those products. So what are we trying to do? We're trying to create an investment return from property on behalf of, in my case, a pension fund client. So those pension fund holders are anything to do from local government authorities through to major corporates and on the street retail investment funds, to a smaller degree for us, but for a larger degree for other real estate fund managers. Once again, a little bit like Francesca, I didn't do a STEM degree. I actually did a geography degree, which is really quite common in property, surprisingly enough. I'm not quite sure why, but there are 3 female Durham geographers in my team alone. So perhaps we maybe recruit a stereotype, we probably shouldn't. But I think what geography did for me was gave me a really broad view of the world, a really good and broad understanding of what it is that people want and how the humans effectively integrate with their environment. So it certainly didn't do anything about teaching me how to do a cash flow, that's for sure. But our job is so much more than creating just cash flows. It really is about every skill that every different person can bring within the team.
Thanks, Jen. And finally, Sophia, if you could tell us a little bit more about what it means to be a strategist specializing in energy transition. And also there's a question on the chat around equity sales. If you could tell us more about your time in equity sales.
Sure. Thank you very much, Joanna, and I'm very pleased to be here tonight. And thank you for all of you to connect here. So the role of strategist, well, it's a very broad one. Basically, I'm looking at a number of issues. First, I'm looking a little bit at the macro issues. So, you know, how the business cycles, economic cycles, commodity cycles, try to understand what's happening to the economy worldwide and anticipate what's going to happen in the next sort of 6 to 18 months. So that's one part of my role. Another role is look at the positioning of the fund and try to figure out you know, what is best basically going to work to make some money. So we work on themes. So as Joanna said, we have a energy transition fund. And so we basically come up with some themes which are going to drive basically our investments. So to give you some idea of themes, we have a theme which is in renewables, so investing in companies which not only build maybe you know, wind turbines and solar panels, to the companies which actually operate the solar farms and the wind farms. So that's, you know, one theme. Another one is electro mobility. At the moment, there's a lot of transition into electric cars, electric trains. So that's another area. Another one is automation. I mean, if you think about it, we are getting a lot of automation in everything that is being manufactured these days. And you know, electricity is really a key theme basically for this energy transition, because with electricity you can providing the electricity is powered by clean sources like renewables, is basically a sort of clean and sustainable fuel. So this is what we're looking for, is sort of energy convictions translated into energy you know, themes. And then we look at companies. So within those themes, you know, which are the companies which are best placed to carry out our vision, and which can, you know, appreciate the most. And of course, you know, we are a hedge fund, so we are also looking for short positions. So companies which are going to underperform the market, and which are going to be basically losers of the energy transition. And then I actually do a lot of I try to establish a lot of framework within the team. So we have a lot of discipline, lots of templates and so on. So it's really a multi role, which is very, very exciting. Yeah. So in terms of sales, it's a good question, because it's something which I did not know the first time I was asked many years ago when I started in investment banking in Australia, can you sell some equities? And I thought, wow, what, you know, what are they talking about? And I was being interviewed by the managing director of this firm, and I quickly thought, well, I can sell anything. You know, I can sell toothpaste, I can sell Burberry raincoats, newspaper subscriptions, lemonades. And I thought, okay, my answer is going to be absolutely, I can sell equities, and I can do it in lots of languages. They say, fine, you're hired. So then I thought, okay, I need to find out what this is about. So basically, it's it's stockbroking. It's proper stockbroking. So you basically are you're on the other side of the fund management. So all these ladies here today, you've heard, are managing some money, and then they talk to the sell side, to the investment bankers and stockbroking firms, who are going to recommend to buy and sell some shares. So it can be shares in Marks and Spencer, in BP, in Apple or Netflix. So basically the idea is for you as a salesperson to find out as much as you can about the company, and share and your opinion to and give your opinion to the fund managers. And of course, it doesn't come just from us. There's our research departments, analysts who write lots of reports. So we work closely with analysts, and then we meet with companies all the time, and try to have a global view on the companies. And then when we have a conviction, we'll call a fund manager and say, hey, I think you should buy Apple because it's a fantastic company. But of course, it's a little bit more complicated than that. But it's a fantastic job, and you learn all the time.
Great, thank you. Just a reminder as well to anyone who joined us late that you can submit a question or many questions, if you like, via the Q&A chat box on Zoom. We've had actually a really good question come through. It says, what advice do you have for us getting into the industry? As in interview tips, how people on the call might differentiate themselves from the rest of the cohort, sort of do's and don'ts. Jen, if I could pass that one to you first.
So that's it's a really, I think it's a really good question, and I think so relevant and so difficult to answer. I think really try to think about what is the area that you're wanting to go into, and what skills do you have that would be useful in that area. So what is it that you can bring? And then I think have confidence in yourself and prepare through your answers and think about the questions that somebody might ask you. Don't try to be the person that shines, just try to be you. Try to just convey your personality and try to just show the person that you are inspiring and engaging, and you're motivated to do what it is that you've asked to go and do. Because that real enthusiasm and motivation really shines through when somebody is sitting on the other side of a table to you, and you're seeing lots of different people, and lots of people will be competing for the jobs that you're wanting to go for. So really just be yourself, because you will be bringing the skills you need.
Francesca, have you got anything to add?
No, I think that was a great answer, Jen. And what I would potentially just add to it too is I really think at any point in your career, but particularly for day one when you're starting out, to just never count yourself out of anything because you think that you don't know about it, or I haven't studied the right degree, or there's someone here who's talking about is the Fed going to raise interest rates, and I have no idea what the Fed is or an interest rate is. That doesn't matter. And I really think that it is the number one thing to not believe that you shouldn't do any type of role. Actually, particularly here, because we're talking about a day in the life of a portfolio manager, I would also suggest that I sometimes think when people have strong communication skills and you've always been told you're a great communicator, people think sales role. And it doesn't mean that you can definitely be great in a sales role, but it doesn't mean that you wouldn't be good in an investment role. Because I often think that one thing people underestimate is how much being able to sell and being able to communicate is absolutely critical in any role that you do. It doesn't matter whether or not you're the person on the front line with a client, or if you're nowhere near the client, you're still always going to have that as a skill. So I would just say that as one thing too, because I think time and time again, we speak with people or may interview people who may say, a key strength of mine is communication, and for that reason, I'd like to be in a sales role. And I just think that's great if that's what you are more interested in doing, but don't count yourself out of doing something else, particularly not on day one, because having all those options available to you, and then over time, things will always change and you'll navigate them. I think it's really important to have it all the doors open for yourself on the first day.
That really resonates with me, actually, because I've discovered in my career there's very much a place for a client-friendly portfolio manager, and that's almost a role in itself. So the kind of stereotype of PM kind of crunching numbers and not doing anything else, I don't think applies at all. We've had another good question come through that I might hand to you, Sophia.
Because add something, because
please.
I do quite a few of these talks, and so I've been thinking about all these subjects, and I would add 3 things which I think are very important. The first one is try to find a differentiating factor to the next graduate. There's lots of people, there's a lot of competition these days. My daughter is applying at the moment to all sorts of jobs, and it's very, very competitive. So I know exactly where the market is at the moment. You need to find something which differentiates yourself from the next person. It can be an extra language. It can be an extra skill that you've got. It can be a particular interest you have that you might not think is relevant, but could be relevant. It's also internships. Do as many internships as you can, as many side jobs as you can. Be part of societies. You need to be able to come through better than the person next door. You have to find a differentiating factor. And then once you start work, also to create yourself a competitive advantage. And you can do this before or after, but find something that you're interested in which differentiates yourself from other people. The second one I would say is do your research when you go and talk to companies. The number of graduates who just, come and talk to you and haven't actually done their research, are not showing interest in the company. That is not a good idea. So, figure out who the people are. Go on LinkedIn. Go and look at the profile of the people you're going to talk to. Try to connect with them. Show some real interest. And then there was a third one, and I can't remember it now. But anyway, these are some of the at least 2 tips to remember.
Thanks very much, Sophia. I agree. I'm always looking when we interview grads for the person that I'm interviewing to really demonstrate a genuine interest in the subject matter beyond perhaps just regurgitating standard interview answers. So I think, wherever possible, where you can demonstrate that by highlighting interesting books you've read, getting involved in investing, stock market games online, this sort of thing, I think always adds something different to the interview. We have had a very good question on work-life balance, and specifically if our panelists think it's possible to manage motherhood and also be in investment management. So I will throw that out to any panelist who would like to answer that, either from their own perspective or maybe having seen colleagues who are mothers.
I'm happy to. I see Sophia might be answering as well. I mean, I think from a work-life balance perspective, things have changed hugely over the last few years, and certainly since I started in the investment management industry. And there is been a real shift in the business, well, certainly the business I work for, to ensure that that work-life balance really is genuinely maintained and shown through the leadership as well. So, for example, we now have instigated flexible working for everybody. So no, that's not just a COVID thing, but we're very much trying to encourage people to work differently in the hours that suit them. Now, we do have a policy that says you can't email after 7 and before 7 in the morning to try to make people switch off. But with the exception that if other people are working in those hours, then whoever they're emailing shouldn't be expected to respond, because they might just be working different hours because it suits them right now. We also have, you have to have your hour for lunch, or at least half an hour away from your desk every day. And we have leave, additional leave on top of your holiday to look after people, and particularly at the moment to facilitate people who are having greater challenges than others, looking after and homeschooling kids. But that's a specific thing for the moment as we speak now. But I think there is I think you create your own work-life balance, and I think the shift has really been in understanding that you don't have to be at your desk in order to be working. So you could be working from somewhere else, or frankly, you could be sitting at your desk and not working. So the presenteeism that used to be in the industry has gone. All of us around on this panel work in a results-based industry. If you're not working, and you do have to work hard, there's no doubt about that. But it's about working intelligently. It's not about working for a number of set hours in a particular way. It's about you finding the right products. It's about you investing in the right things. It's about you analysing the markets in the right way. That doesn't mean that you have to forfeit everything that goes with it outside of work. It means that you have to use your work hours wisely and intelligently. Sorry, Sophia, I know you wanted to start, so I'll pass over to you.
Well, thank you very much, Jen. Well, I think in fund management, things are a little bit easier than the sales side. The reason for it is that when you're on the sales side, if you're an equity sales in London, you have to be at your desk at 6:30 a.m. So 6:30 a.m., you try to figure out where you live. Most people live at least 45 minutes away from the city. So, that makes it, let's say, 5:45, you leave your home. Most of them leave home actually at 5:30. Some of them actually at 4:30. I had some colleagues who would leave home at 4:30 in the morning. So it's a bit of a different lifestyle if you're on the sell side or on the buy side, because when you're on the buy side, well, you basically read at your leisurely time all the reports that the people on the sell side have been writing since 6 o'clock in the morning. So if you're looking for, a bit of an easier type of job, then fund management is absolutely perfect. Weekends are great because, markets are shut. And so it's a bit easier. Then, of course, it depends what you actually do, if you're in fund management or on the sales side. Because if you're actually an analyst, which most people are, there are not many PMs. There are lots of analysts, but not many PMs. I will ask the analyst to look at something on a Friday night, and I want to make sure it's ready on Monday morning. So it depends what type of boss you have. But overall, even on the sales side, it is a good job that, by the time, if you start at 6:30, at 6:30 at night, you're probably finished. So you're not in the office until 10 or 11, unless, of course, you're an analyst and you're doing some research, and you probably can do a few all-nighters. So if you want to do both, oh, can't find the word. Anyway, if you want to be in finance and you want to be a mother, definitely don't want to be an analyst on the sales side, because you don't have a life at all. Sales is much better than the sales side, than research. So that's one point. The other thing I would say is I had actually a terrible burnout, and I want to point it out here, because it's important people hear about these things. And I was basically trying to do too much, work 12 hours a day, raise up 2 kids, look after elderly parents, homes, you name it. And as mothers and as women, we have more energy than men. Most men, they come home and they say, oh, I'm tired, please prepare dinner, whatever. But and so you think you can do everything, and I did everything for 30 years, and then I crashed. And crashed mean not being able to talk for 1 month. So I do think that with the technology today, the equivalent would come much faster than 30 years. If I had worked at the same pace with the technology we have today, it would have taken me 15 years to crash, not 30 years. So do be careful, do have activities outside of work, do exercise, live a balanced life, see your friends. Work is not everything. I mean, I've got no regrets because I've had a great time, but just be aware that these burnouts, do happen, and it happens specifically to women because women try to do everything. Most men say they can't do everything, so they just work and that's it. But the women take the load on, whoever their husbands are, I'm afraid.
Thanks, Sophia. That's good advice. I'm hoping with this kind of COVID-19 working from home trend that some of these, some of the hours that have historically kind of been eaten in the day by commuting get repurposed, and that women are able to kind of put those hours into, into activities that are more meaningful to them. That's certainly something I'm very hopeful and encouraged by, although the data I guess is mixed on the impact of COVID on women. We've had a few questions on ESG and sustainability, and specifically about whether ESG sustainability is a trend that's going to last. And there was another question that asked, are all funds now sustainable funds, and if not, why not? And Francesca, I thought you might be perfectly placed to help us with that.
Yeah, sure. And I think even just the fact that there's a number of questions on it, it's just really a signifier of something that I think we've all seen what has been there and progressing and becoming more entrenched in the industry, just catalyzed dramatically over what's happened in the last year. And you've seen it in the amount of flows into sustainable products, but also in the number of conversations and things that people have been having. I think because acknowledging some people will be more or less familiar with it, but I think the very starting point is just to acknowledge that the term sustainability or ESG or impact, or the vast array of different terms people could use, are mean very different things. And there's many different layers and depths, I would say, to when we talk about sustainability. Just stepping back very, as an initial starting point, to some extent, sustainability in its sort of most basic context has always been integrated. When you're looking at a stock or you're looking at a bond, or say you're assessing the government debt of a country, you're always going to be looking at that governance components of it. You're always going to be looking at, do I think on, say, the company perspective that they can deliver long-term returns? And so there's always been an element at play. It's then the trajectory of how much deeper does that get integrated in your investment process? What are the different sort of, say, factors or criteria you might be looking at? And what's our outcome we're looking for? Right along the breadth to when you go to, say, much more towards the philanthropic end of the spectrum, or the more impact orientated, where you're looking for investment returns, but you're also accepting that you may, in some instances, give up returns in some ways to pursue a beneficial outcome on a certain level. So this full breadth of spectrum. But I'd say what we've seen is kind of the proliferation of many, many more solutions in this space, a general trend based on client demand and people's awareness of, all of the key topics that we're thinking about all the time: climate change, biodiversity, social inclusion, all of these topics becoming much more front and center, but also regulation and the support there, which is all driving the trend. So I would see it as something where we are on a journey, and there is still a lot of work and time to be done in helping us to better assess and classify different solutions so that people are really aware of what it is exactly that's being taken, how far down that depth process is a certain solution or fund going on ESG or sustainability. And that's been a big focus and a big change in the last year. But I think we're really, on that journey, and it's got a lot further to go too. So very much I see it as here to stay. But one question, just I guess because it was linked on, why is not everything ESG? And one comment I would also make is we've also got to step back and look at where we were, say, 10 years ago, and the solutions that were presented were not thought of in ESG, even if there was an element of it in it. But we also have to acknowledge that, say, in a multi-asset context, some asset classes are much further along that process. So say bottom-up stock selection, or say if we're talking about thematic themes, renewable energy, certain areas, or green buildings, it may be more obvious or clearer and more researched in terms of what might the sustainability criteria be here. But there are other things and other areas of the market, other asset classes, where it's just harder to do. It's in its more early stages, and it's much harder, say, for an analyst perhaps to even assess those criteria. So just also thinking about that too. I think we often think about it on a stock level, for example, just because that's been where there has been so much focus previously. But actually, if you're a multi-asset portfolio manager, you have to be able to think across all the asset classes on that as a topic too. So it can take some more time. So.
Got it. We've had a couple of questions on I guess how candidates can differentiate themselves, and whether our panelists have any thoughts on the importance of CFA as a differentiator, or indeed university grades, because we've spoken about communication and some of these soft skills that candidates can bring to the interview, but the question is really how important is that relative to university grades really when it comes to being hired? And I will throw that out to anyone who cares to contribute.
I guess I can provide a quick comment, and then Jen, I see you're off mute, so please chime in. But the CFA just question, totally personal view. I would think it really depends on when you're applying. I didn't know what CFA was when I was at uni, so it wouldn't have crossed my mind to have done it. I have now done most of it. I was meant to do my level 3 last year, and it got cancelled, so that'll be something to enjoy over the next couple of months. And I actually did the CFA ESG investing certificate at the end of last year because I was interested in it, and it was becoming a bigger area of focus and conversation in my job, and is one that's it's a quicker to do in terms of it's a standalone certificate rather than the 3 stages of CFA. But to me, it really comes back to what I would look for when I look at a CV is sort of excellence in what you are doing. So in a university degree, of course, great to have a great degree from a great university. I guess it's going to be a plus, but that's only one element of what people are ever looking at. Your interest, the other extracurricular things that people have done. Have you shown initiative? There's some amazingly, memorable CVs when people have really done something that is unexpected and have illustrated a passion, something which might seem very tangential, but they've gone and got something off the ground, or they founded a business, or they've pursued something. And those things are all, they really do carry a large weight too. So I would always think great to have as strong an academic background as possible, going to be helpful, but it is by no means the only thing that people are looking at. And really, you do have to also remember, and someone said it to me when I was just starting out on this whole process, someone said, these people have to want to work with you. And that comes across actually from your CV too. Do people look at someone and and think it might have a bit of a braggy element to it too, or something, it can work against you too. So I would say be entirely yourself, but also recognize people want to work with interesting, motivated people who've got a lot going on. And I think that can all shine through beyond just, the showing that you are obviously interested in the job role that you're actually applying to. Is both things are important.
Do you know, Francesca, you answered that much better than I ever could have done. So I really don't have much to add there. I think I can only really second what you're saying. When we have CVs, I mean, yes, of course. Actually, we're trying to move now to blind CVs, so we don't know what people's A-level grades were, or often they're the universities that they went to, but so that it doesn't colour us. But undeniably. The better you can try at school, the better then it's going to put you. In the field we're in, it is incredibly competitive, and it is important to work as hard as you possibly can. But I don't think, and I agree totally with Francesca, it's not everything. It is about what you can bring, what skills you can bring, and how you can convey those and tailor those to the area that you want to work in. And I think the one thing I would say is where you can make it up is ensuring that you don't just put a blind application into somebody that's the same as every single other application you put in. That as both Francesca and Sophia have said, you've done your research, you've understood what it is that team does, that business does, and you've shown them that you're interested in it. It's not that you just fancy working for Goldman's or whoever it might be. It's that you understand and you have a passion for what they do, and you can work with those people, and that's what you're trying to really convey with the interest that you're showing people that you have.
So I might just add just one little thing, and because Francesca and Jen really did it all. Unfortunately, in terms of big organization, investment banks, and so on, your first barrier is algorithms. And so if you don't have the grades in all those big firms, you just don't get through. And then once you got, if you got through that, you even have interviews with computers. So it's actually the computers which assess your, your interview, your tone, what you say, and so on. So to actually be able to get through to a human being in one of these big investment banks is very, very hard. So unless you have top grades, it's very difficult to go through these. So that doesn't mean that you can't get a job somewhere else, but if you do get rejected at all these top names, that's because of the grades. It's as simple as that. So it does matter for those banks.
Thanks very much, Sophia. I have to say, Jen, I'm really loving the way that DTZ are approaching many aspects of your work-life balance and thinking about, hiring in a more inclusive way. And hopefully that,
It's a new area. It's not something that we've done for many years. I'd like to say it is, but it's something that the Cushman & Wakefield business is the wider part of our business as well, and they are very strongly changing and quickly changing in these areas, as are we, because I think one thing we have found, there are many reasons why we are trying to change this agenda, but I think what we have found is that a diverse team it can only be a benefit. What are we really here to do as a business? We're here to provide returns for our clients. What is the best way of providing those returns for our clients is to bring as many skills and as many different people with different views into the business as we can. Now, we have the luxury of being able to recruit the people that we would like to have in our business, and that does come down to the skills that they bring, but we're very much looking at the skills they bring and trying to change the diversity of the property industry, particularly, which has traditionally been focused in a specific area, and that's changing rapidly because people have realised that different people can bring better returns.
Yeah, I think my personal take is the industry is changing, really rapidly, and I think that's super encouraging for people from, non-traditional backgrounds, certainly, or people who are looking for more work-life balance, as a standard part of their career. I really, really do think for me at least, it's getting a lot better. We've had a question, which actually I was planning to ask anyway, which is a good one, around what the best and worst element of your job is. Francesca, perhaps you could start.
Oh, on the best, hard to kind of give one point. I really enjoy the people that I work with, and I like working in, I find it a really buzzy environment. I enjoy sitting next to people that I, have not actually physically sat next to for the last year, but have spoken to on Zoom countless times a day. And I find it intellectually challenging and interesting for that. I feel that the job is never done, and I feel that I'm learning continually, and I feel that that's sort of the key thing that would keep you there, because if you feel that you're not stimulated on a day-to-day basis, then that's, I think, when it's probably suggests it's not the right thing to be doing, or you need to make changes to do that. So the people and actually the content. The worst bit, probably more of the fact that sometimes I think things are more operational or bureaucratic and more difficult to do than one might hope. It's sort of a sad fact of life, but particularly when you start out a career, I would just acknowledge that despite all of the fantastic, very stimulating things that come with it all, when you're, say, a first year analyst at any firm, there will be elements of things that are more operational or more to do with complying documents or things like that than you might hope. And they're an element that's there. Ironically, though, I actually think right at the very, very senior end, people get hauled into many more things to do with risk and operational elements than they may want you to. But that's probably the downside. But what I would say is you get a lot more efficient at all of it the longer you're doing it, and can maximize the amount of time that you're spending, doing those things that you're really interested in, and kind of carving out all your own projects. So something to just kind of grapple with and make sure it takes up as little of your day as possible, but so that you can spend time focusing on where you really want to learn.
It's often a lot of admin. It's not always sexy, is what I'd say. Jen, tell us what's the best and worst for you.
So I think for me, the best is the diversity of what I do. No day is the same, and for me, that means that it's still interesting, it's still stimulating, I'm still learning. I'm learning from those that work for me, I'm learning for those that I work for. I'm learning from really the people on the street teach us what we should be investing in, because what are we doing? We're trying to understand what occupiers want. And occupiers are everybody outside that want to use a physical building. So you're really taking your research and your understanding from every part of your daily life, and you're really trying to use those skills in so many different ways and so many different activities during the day. And that's everything from understanding how to redevelop an asset, to understanding how to repackage a product, to understanding what it is that's coming next, which I wish we all knew, but I think we're all trying to establish, aren't we? And I guess what do I dislike, or what do I find hardest? In so many ways, I've got to agree with Francesca. I think for us, we do a lot of reporting. Clients with all of the industries that we're in trust us with huge amounts of money, and they give us a huge amount of responsibility with it. And there are very few, there are very many regulations within how we work, but there are also very few boundaries that they give us. And with that goes a huge amount of trust. And we're working with that trust, and we're reporting back to our clients on exactly what our strategies are, how we're going to enact those strategies, what we're going to do, and what we've done. And I think the downside of that is there's a lot of reports. And that is one thing I think to probably highlight to people is there's a lot of fun, there's a lot of diversity, there's a lot of, there's a lot of different stimulating, exciting things that we can do. There's also a lot of report writing there, and a lot of processing in the background, which just has to come with that responsibility.
That's a really good answer. Sophia?
Thank you. Well, Warren Buffett, who's 90 years old, says the thing he likes the best about it is to learn. And you've heard it from Francesca, Jen, and yourself, Joanna, and it's the same with me. So, if at 90 years old, this is what is best about it. It's the best for us as well. It's the diversity. I mean, the other thing is, this was more on the sell side than it is here, but it's, it's similar. It's actually having access to the top CEOs of the world. I used to travel with the CEO of Shell for 3 days, or Total, or the largest banks in Australia, the largest mining companies in the world. Spend that time with people like this on a one-on-one basis, being in the car, discussing their families, discussing the world, was amazing. I was traveling in New York with the CFO of Total, the oil company, the French oil company, on the day of the Lehman Brothers, collapse in 2008. And here we were in the car, and he said, okay, what do I do? I've got $10 billion here and $10 billion there. I need to organize this, to be in the thick of it with basically the top 0.0001% in the world is fantastic. And that's what I've liked the most, is to be able to have conversations, exchanges, sometimes advice. I would give advice to some of those people, and I would ask them what their tips were to bring up successful children, for instance, and that is priceless. So it's learning, but also spending time with extremely successful people and learning from them directly, one-on-one, sitting next to them in a car or across the table gives me a buzz. And the worst thing, exhausted, exhaustion.
Your hours.
Yeah. I don't have much of the bureaucracy anymore. Been there, done that. So I've got other people to do it for me now. But I sure had my, my share of it.
Great. Perfect. Thank you. Thank you all. And thank you to everyone who sent through those brilliant questions. They were really excellent, and hopefully we have helped in some way. I will pass back to Vicky now, because we're almost at the hour, and conclude. You're on
It would
mute,
be useful if you
Vicky,
could hear me, wouldn't it? Hi, everyone. Thank you to our incredible panelists. I'm sure you'll all join me in just saying that you had an incredible session. I can tell from the number of questions that have come in, and that you've all just been incredibly engaged and just really enjoyed the session. So thank you all for being here for us, for helping us. And as I said earlier, the best thing about GAIN is just this wonderful resource we have, who are just so willing to, help us and share their knowledge and experience with you all. So please do stay in touch with us. Our website is www.gainuk.org, and we're on all the social media networks where Girls Are Investors, on LinkedIn and Facebook. And we're also at Girls Are Investors on Instagram, and just Our Investors at Our Investors on Twitter. So do stay in touch with us, attend all the events you can. They're all free. There's no reason not to, and just learn it all you can. And again, thank you to our wonderful panelists and moderator, Joanna. Thank you so much for your time. Have a good evening, everyone. The recording will be on the website from tomorrow, so feel free to watch it back.
Thank you very much.
Thank you.
everyone.
Bye.
Bye-bye.